Markets are watching Nvidia earnings, fresh US inflation data, and the tail end of Australia's reporting season. Joining us at the desk is Kyle Rodder from Capital.com. Always good to see you. Jensen Huang must be pretty happy at the moment.
The results were good. The thing is for the markets is that they basically had to be blemish free, and they weren't. So if you want to run through the numbers, the top line beat, the bottom line beat, guidance was basically in line with expectations, if not slightly above the median estimate for analysts. But the issue that the markets really clung on to was that data center revenue, which is obviously tied very much to that AI investment theme and ongoing chip demand, was a little bit lower than expected, so a slower growth rate going forward potentially. And there's this question about what's going to happen with China as far as not so much export restrictions anymore, but potentially import restrictions from the Chinese. And they basically didn't book any sales for the quarter. They did say, or the company did say, that it expects that to normalise and shipments to begin again for the quarter ahead, which will be their Q3, but there's still a little bit of doubt over that. So basically you had the stock at record highs. As a result, you pretty much needed, like I said, a blemish-free report. There was a few little pock marks, and so the stock came off. But overall, they're still delivering very much on the top and bottom lines.
It's interesting because the whole market has been waiting, holding its breath all week for Nvidia's response, Nvidia's actual numbers. And China is such a fascinating one, of course, because they have such close relations with Taiwan and the United States. And as we know, the chips really have entered geopolitics as well.
Yeah, I mean, it's fair to say Nvidia's results now sort of transcends the company itself and its geopolitics. It's also the AI thematic, and then it's also just simply economic growth as well.
And the flow on to other companies, because what the need is for Nvidia will kind of reflect what the need is for other companies, right?
Yeah, well, there's the back and forth that goes on with these results with the hyperscalers, which are like the Metas and the Amazons and the Alphabets of the world, and then Nvidia as well, because it talks about it tells you a lot about chip demand, but it also tells you a lot about AI investment intentions. So we get a lot of that kind of coming through some of those other companies' names.
Be happy probably because it will make it look like he hasn't missed the boat so much.
Well, maybe not. I mean, Apple's issues are separate to a lot of this kind of stuff anyway. But there are a lot of companies out there that have sort of flagged increased investment in artificial intelligence. There is that theme out there at the moment that there's maybe an overcapacity building there. And we did get a bit of a sell-off actually in the artificial intelligence complex last week on that MIT report that 95% of CEOs suggest that they haven't found a productive way to employ AI just yet. So there is this sort of persistent fear of overinvestment.
If you have a look at what Jensen Huang has said about China, he believes it'll be a $50 billion market, but still a lot of questions about that H20 chip.
Yeah, so again, no book sales for the quarter because that was because of export restrictions out of the United States. They've been more or less removed, but there is this question from the Chinese perspective to what extent they allow Nvidia to sell the H20 chip because of basically strategic considerations.
No one trusts anyone at the moment.
Well, no, and the thing is as well, there's the element of chip security, there's the element of data information security as well, and then there's the element of, basically the strategic element is that it's in their interest to make sure that they have a domestic player that can create the chips they potentially need for their AI build-out.
If you flipped it around and the US was relying on Chinese AI chips coming into the US, I can imagine there'd be a lot of frustration there as well.
Yeah, I mean, it's economic statecraft at this point in time, and this is a part of the new era that we're in now, where business is basically used as an agent of the state and not let to sort of run free in the interests of the free market. So this is the big question. The company said that it expects to book somewhere between $2 and $5 billion of revenue from the Chinese market because of the ramp up of the H20 chip in the quarter ahead. That's a huge question mark as to whether that materializes or not. And it's one of the reasons why investors are potentially cautiously optimistic, because that's not really being discounted in the share price at the moment. However, if we do, like we just said, speak from the perspective of China's strategic goals, it doesn't really serve their interests to have Nvidia as a major player in their market.
Let's talk now about the US inflation numbers. We're expecting those. We've been watching them go up in other countries, have gone up slightly in Australia, they've gone up in the UK as well. What are we expecting from the US, and will it have a huge impact on the Fed that now has a bunch of issues?
Yeah, well, it could. So just to provide the forecasts, the markets are expecting a bit of a tip higher in the inflation number, or the key core inflation read, to about 2.9%. So there is, for starters, the fear that inflation is anchored well above the Fed's target, and that as tariffs start to move through the economy, it's sort of moving away from target as well. The caveat to that, however, is that the Fed in its last summary of economic projections suggested that it expects that key measure of inflation to peak up to about 3.1% by the end of the year before moderating. So it's given itself a bit of wriggle room to sort of, allow for this sort of one-off lift in the price level and continue to cut interest rates. I think the big concern tonight will be is if basically the number comes with a 3 in front of it. If that happens to be the case, maybe September is still live, but the rates curve starts to lift a little bit and price out some of those further cuts the markets have currently got baked in on the basis that, maybe inflation is going to be stickier and continue to push away from target. That means a strong US dollar. That probably means a little bit of a pullback in stocks if that happens to occur. So there's a little bit of wriggle room there that the Fed's created. But again, if it looks like it's picking up quicker than previously thought, that's when the volatility might hit.
Speaking of volatility, change on the board of the Fed, obviously with Lisa Cook, but also huge questions about Jerome Powell, who no doubt will be chopped at the end of the year. In 6 months' time, do you think we'll be looking at the inflation number, or do you think it won't matter because Trump will have the board stacked?
Well, it'll matter, and it'll matter more actually, because if he does stack the Fed board with a bunch of acolytes, or at least extreme policy doves, there is the risk that they'll be more accommodative in policy, and as a result, push inflation higher, and the markets will have to discount that eventually. And you can actually see that this week, that the response to the Cook firing immediately was to see a drop in the short end of the yield curve, which normally reflects policy rate expectations, so further rate cuts in the future, but a lift in the long end, which reflected two things. One, a bit of a risk premium because the institution is losing its independence, at risk of losing its independence. And on top of that too, that, easier policy rates means the risk of higher inflation going forward as well. Yeah. And so that long-term, that long end of the yield curve tends to represent that. So we've got the markets basically pricing that in. Once more, if Trump stacks the board with people who are very, very dovish, that's an inflation risk that the markets will have to discount as well.
Let's talk Aussie reporting season, earnings season as well. How are we going so far? Some interesting reports from Qantas during the week as well.
Yeah, probably one of the few companies that have basically exceeded expectations and that investors have rewarded for it. So the company's profits were, I think, the second highest on record. The dividend was a bit higher than expected, and now the stock's at record highs once again. So that was one of the good news stories. I think if you looked at the market as a whole, the ASX 200 has delivered pretty tepid earnings growth, if not slightly disappointing. And you can kind of see that in some of the stocks that have been absolutely punished when they've missed expectations. CSL was down 20% over the course of a couple of days last week.
And they've made a huge number of firings over the past week as well.
3,000, yeah, and announced a restructure too, which you can kind of argue that maybe considering, they purchased that Seqirus asset 5 or 6 years ago, it was accretive. Maybe the markets are discounting a little bit of that coming out of the share price in the future, but for the most part, it's because of these big one-off restructuring costs and fears that maybe the growth trajectory is fairly weak. But what you can basically see is that we've got the market at record highs. It's about 9,000 points. It did that for the first time last week. Because a lot of that's being driven by technical factors and overseas macro factors rather than company fundamentals, when those companies miss earnings expectations, they're being punished and those stocks are getting smashed. So that's kind of been the story of things. In fact, the market's rallied through the fact that earnings have been a little bit tepid. But once more, when those companies on balance have missed earnings expectations, investors have punished the losses more than they've rewarded the beats effectively.
It's been interesting to watch Vanessa Hudson, just to finish up on Qantas, because she's obviously taken over from Alan Joyce. She was the CFO. A lot of the issues that Qantas is facing are financial. It's interesting to see that they put the person who had been the CFO under Alan Joyce into that role as well. But they are spending the money on new planes, which, as we know, is much needed for poor old Qantas.
Yeah, I mean, that was kind of one of the criticisms of Joyce, was that during his tenure, he had the opportunity to upgrade the fleet and didn't do so really on the basis that they wanted to, maintain the financial performance of the business.
Which is my point about the CFO, because if I go to the CFO of my company and say, I want to spend a huge amount of money, they're probably going to say, now's not the time. So what responsibility would she have had back then?
Well, the CEO has a final call at the end of the day, and I think it was probably Joyce's responsibility to do that or not. But effectively now we do have them coming to the point where they have to upgrade the fleet because otherwise they're going to get in trouble if they don't.
Yeah.
Nevertheless, though, there's a lot you can say about Qantas and criticising them for the way that they've kind of maybe fleeced the taxpayer, maybe didn't provide the best service over the last 3 or 4 years.
There's
a little
a few
bit
angry baggage handlers out there as well at the moment, and a federal court issue.
So all these other stakeholders that weren't particularly happy with the company. But if you look at it sort of from the old sort of Jack Welchian point of view, which is shareholder supremacy, or primacy, I should say,
they're back.
They've delivered strong shareholder returns for the last 3 or 4 years, so the investors are rewarding them.
All right, we've got to leave it there. Appreciate your time as always, Colorado. Thank you.
Thanks.